There's a real comfort in having life insurance, right?
Right.
That peace of mind.
Definitely. Knowing your family is protected.
But have you ever thought that a medication, something you take for your health, could actually stop you from getting that coverage?
It's a shocking thought for many people. Yeah.
Yeah. It seems counterintuitive. Could a prescription actually mess with your family's financial security?
Well, it's a crucial point most don't consider until they're, applying and hit a snag. We think managing a condition means things are fine, but insurance underwriting, that's a different ballgame sometimes.
Exactly. So today we're doing a deep dive into something really important. Specific medications that, well, often make someone uninsurable for life insurance.
We're going to unpack why insurers see these drugs as red flags.
Yeah, the ones we'll be covering are furosemide, that's Lasix torsemide, or Demodex, and bumetanide, Cumex, kind of a group there.
Right. Loop diuretics.
Then we'll look at cancer medications, just as a broad category. After that, Entresto.
A specific heart failure drug.
And finally, the Alzheimer's medications, Aricept, Exelon, Razidine, Namenda, Dunpezil, and Memantine. Bit of a list there.
And the goal here isn't just like reading off a list. We're using info that looks at why these drugs worry insurers. We want to give everyone a clear picture of the logic behind it.
Think of this as getting you quickly up to speed on this overlap between health and financial safety. It's not just theory. It could affect you or someone you know.
Right. We want to get into the underlying reasons, the bigger picture.
It's interesting how insurers use medication almost like a signal, isn't it?
Exactly. It's less about the drug itself being the problem and more about what needing that drug suggests about the applicant's health status.
So to help us break it down, we can group these, right? You mentioned the loop diuretics first.
Yep. Loop diuretics, then the cancer treatments, that heart failure drug Entresto, and then the Alzheimer's meds. That gives us a roadmap.
Okay, let's get into those loop diuretics. Furosemide, torsemide, bumetanide. They're prescribed pretty often, aren't they? For things like fluid retention.
That's right. Usually for edema, that's the medical term for swelling from excess fluid. You see it a lot with conditions like congestive heart failure, CHF, and also kidney disease, liver disease. Basically, they help your body shed extra fluid. They work on the kidneys, specifically blocking sodium and chloride from being reabsorbed, more salt and water out.
Like telling your kidneys to squeeze out more fluid.
Pretty much, yeah. That's a good way to put it.
And there are differences between the three in terms of strength or cost.
Yeah, furosemide Lasix is super common, generally the cheapest. Torsemide is a bit stronger dose-wise and lasts longer in the body. Bumetanide is the most potent, used when the others maybe aren't quite cutting it.
Okay, so these drugs are clearly helping people manage some pretty serious conditions. Why are insurers so wary then?
It's precisely because they treat those serious conditions. That's the main reason. Seeing one of these on an application screams high risk to an insurer. It suggests an underlying condition that significantly increases the chance of, well, an early death and a costly payout.
Especially CHF. You mentioned that.
Yes. Congestive heart failure is often a huge red flag, like a potential knockout condition in insurance terms.
What does that mean exactly? A knockout condition, high risk of a claim soon.
Yeah, basically, the stats are stark. The American Heart Association this year, I think, said about half of people diagnosed with CHF die within 5 years.
Wow. 50% in 5 years.
That's a massive number for an insurer calculating risk. And these diuretics are also for kidney disease, right? Treating advanced kidney failure, like with the dialysis, incredibly expensive, like $90,000 a year on average.
Yeah.
And severe liver disease, also a grim outlook, maybe 50% one-year survival without a transplant. So insurers see these meds and think, high chance of an early, large claim.
So it's really the underlying disease, not the diuretic pill itself.
Exactly. It's an indicator. Even if one drug, like torsemide, might be slightly better at preventing hospital readmissions for CHF compared to furosemide, something a recent analysis pointed out for the insurer, the core problem remains. The person has CHF or serious kidney or liver issues.
And are there other worries, like side effects of the drugs themselves?
Good point. Yeah, they can cause issues. Dehydration, low blood pressure, electrolyte imbalances, which can be especially risky with heart conditions, even hearing damage, potentially. Insurers look at that too. It adds another layer of potential health complications and risk.
So what if someone's on, say, Lasix, but they're doing great? Condition managed, doctor's happy, still a problem for life insurance.
Unfortunately, yeah, it often still is. The information we looked at suggests being on these frequently leads to an automatic decline.
Really? even if they've improved.
It seems so. Insurers often don't dig deep into how well controlled it is. It's incredibly frustrating for people who might have, gotten much better. Maybe their heart function classification improved significantly, but that medication is still on their record.
That feels really unfair. So what can they do? Are there any options?
Well, the main one that comes up is guaranteed issue life insurance.
No medical exam for
Well,
those, right?
correct. So you can get coverage, but, and it's a big but, the premiums are way higher.
How much higher?
Significantly. We saw figures like maybe $1,200 a year for just $25,000 of coverage, and the coverage amounts are usually much lower too. So it's expensive, and you don't get as much protection.
Okay, a costly alternative.
Hmm.
Let's shift gears to cancer medications. That's a huge umbrella term, isn't it?
It really is. Covers everything from standard chemo to targeted therapies, immunotherapies, for all sorts of cancers. Lung, breast, leukemia, you name it.
And I bet this is another category insurers are extremely cautious about.
Absolutely. Two big reasons jump out: the sheer cost of treatment and the uncertainty about the long-term outcome.
Because, yeah, cancer treatment isn't cheap.
Not at all. The average cost per patient can be around $150,000. That's a massive potential claim looming. Plus, survival rates vary wildly. Lung cancer versus, say, certain types of breast cancer, very different outlooks.
So insurers see the potential for big bills and the higher risk of mortality.
Precisely. An active diagnosis, or even a recent one, signals a higher chance of recurrence or progression. Even things like maintenance therapies.
Like hormone blockers after breast cancer.
Yeah, exactly. Those can still cost a fair bit, maybe $10,000 a year, and even being on those can lead to denial, especially within a few years of diagnosis.
Wow.
Take leukemia as an example. The 5-year survival rates, they're a major concern for insurers. So often it's just a blanket exclusion. They don't always look at the individual specifics, the type, the stage, the response to treatment.
Does the type of cancer drug matter? Like newer immunotherapy versus older chemo?
You'd think it might, but often the fact you're undergoing any cancer treatment is the main issue. Costs do vary, of course. Some newer drugs like Keytruda are incredibly expensive, maybe $150,000 a year, while older ones like Herceptin might be less, though still substantial.
And the newer ones often improve survival rates, right?
They do. We saw mention of Keytruda significantly improving outcomes for metastatic melanoma. But even with those advances, and even for less aggressive treatments like tamoxifen for early-stage breast cancer, getting insurance within that, say, 5-year window after diagnosis, still very tough.
It must feel like a slap in the face for survivors.
Yeah.
They beat cancer, then face this financial hurdle.
It's a huge challenge. There's definitely a feeling of being penalized, and you hear the argument, medicine's advancing, treatments are getting better, more personalized. Shouldn't insurance risk models catch up?
Yeah.
But for now, many survivors are stuck looking at those expensive guaranteed issue policies or just relying on whatever group insurance they might get through work.
Okay, let's talk about Entresto next. That's specifically for heart failure.
Yes, Entresto. It's a combination drug, sacubitril valsartan. Relatively newer, approved in 2015, specifically for CHF. It helps reduce strain on the heart.
And it actually works quite well, doesn't it?
It does, yeah. Studies show it can cut the risk of death from CHF by around 20% compared to older drugs. It's a real step forward.
So if it helps people live longer, better lives, why is it still a red flag for insurers?
It comes back to the underlying condition. Entresto is specifically for CHF with reduced ejection fraction, a serious type. And like we discussed with the diuretics, CHF itself has that poor prognosis, that 50% 5-year mortality risk.
Right.
Even though Entresto improves the odds, taking it confirms you have that serious condition. And CHF treatment is costly, maybe $30,000 a year overall. Plus, Entresto itself isn't cheap, around $7,500 annually. So, diagnosis plus costs, high risk for the insurer.
So the diagnosis is the main killer for the application, even with effective treatment.
That seems to be the case. It's incredibly frustrating. Studies show Entresto users are less likely to end up back in the hospital. But despite those clear benefits, the underlying CHF diagnosis often leads to a denial for traditional life insurance. Again, leaving people with those pricey, guaranteed issue policies as the main fallback.
It really highlights a gap, doesn't it, between medical progress and insurance practices.
Absolutely. There's a lot of talk about needing more personalized underwriting, looking at how well someone's actually doing on the treatment. But the industry moves slowly on updating these things. So people benefiting from Entresto, still facing major insurance hurdles.
Okay, last category, Alzheimer's medications. We listed Aricept, Exelon, Rezidine, Namendaz, Donepezil, Memantine. two types here.
Yeah, basically two main groups managing symptoms. You've got the cholinesterase inhibitors, that's Aricept, Exelon, Razodine, Donepezil. They boost a brain chemical for memory.
Okay.
And then the NMDA receptor antagonists, Namenda and Memantine. They regulate a different brain chemical used for various stages of Alzheimer's or other dementias.
And an Alzheimer's diagnosis itself, but that's pretty much uninsurable for traditional policies, right?
That's the general rule, yes. Alzheimer's affects millions, and it's seen as uninsurable by most standard carriers. These medications, while helpful for symptoms, signal a progressive degenerative disease with no cure currently.
And the long-term cost and impact must be huge factors for insurers.
Absolutely massive. Care costs in later stages can average $80,000 a year, nursing home care, often over $100,000 annually. And sadly, life expectancy is reduced after diagnosis, maybe 4 to 8 years on average. Combine all that, it's extremely high risk for an insurer.
Do the side effects of the drugs themselves play a role too?
Less so than the disease, but they can be a factor. The cholinesterase inhibitors can cause nausea, diarrhea, dizziness, increasing fall risk, maybe. Memantine might cause confusion or agitation sometimes. And stopping these meds can lead to a faster decline, which insurers might note as potential for increased care needs down the line.
So families dealing with Alzheimer's face enormous hurdles getting life insurance protection.
A very significant barrier, yes. Again, guaranteed issue is often the only path, adding another financial strain onto already high care costs. You could argue insurers should look at the disease stage or how well someone responds to treatment. Donepezil can provide temporary cognitive help.
Right.
But the reality now is mostly a hard exclusion. It reflects the seriousness, the cost, and maybe even the stigma associated with Alzheimer's.
Looking at all this, it's clear this isn't just about a handful of drugs, it's a wider problem.
It really is. We saw a stat suggesting something like 15% of Americans get denied life insurance because of health issues, and medications are often central to that.
And the options left are limited and expensive, as we've said.
Exactly. Guaranteed issue, maybe group plans through work. It puts people already facing high medical bills in an even tougher financial spot.
So let's wrap up this deep dive. We've looked at loop diuretics like furosemide, cancer meds, Entresto for heart failure, and Alzheimer's drugs like Aricept and Namenda.
And the common thread is that insurers see these as signals of serious underlying conditions. CHF, cancer, Alzheimer's, conditions with high mortality risks and potentially huge costs.
Right. It's usually not the drug itself, but what it represents about the person's health and longevity prospects. That's why they're red flags.
And that often leads to denial or those really high premiums, even if the person feels their condition is well managed by the medication.
So for everyone listening, understanding this link between health, medication, and financial security is just crucial. It might affect you or your parents or friends. Knowing why these denials happen is key for planning.
Definitely. And it leaves you with a big question, doesn't it? With all the medical advances happening, treatments improving all the time.
Yeah.
Is it time for the life insurance industry to maybe rethink how it looks at these conditions and medications? Could there be a fairer way to balance their need to assess risk with people's need for essential financial protection? Something to think about.